Welcome aboard. It is Thursday, thumping Thursday. Thump me. I haven't done anything wrong. Well, I don't think I have anyway. Not today, but it's probably due. But I hope it's not around trading, I've got to say. Welcome aboard. It's wonderful to have you here, of course, for the last show of the week. No Ash again today. We will be, of course, welcoming him back to the fold next Monday. And I don't think there's a holiday next Monday, is there? I think there is here in Australia, but I don't think that's going to affect anybody too much. Righto, let's thumping Thursday to you too, Paul P. Let's take a look and see what is available to us for a potential pound breakout today. I'm almost there, I think. I see the range. Don't like that one. We could kind of go with yesterday here. I think we could go with there, and we could go with. We'll have to go with there. We've got no choice. That was yesterday's low. Gee, dangerous trading there. Short, I've got to say, but long doesn't look too dusty. Yeah, okay. I think we might place a trial trade. Of course, this is not a serious trade per se, guys. This is all about. No, I don't need that. This is all about testing to see what works and what doesn't. And yes, we are still accumulating data. Believe it or not, Ash and I will go through that again very shortly. We haven't done so for a while. So we're going long, 5 pips above the high of this candle, which is, I better write this down, otherwise I will forget. Pound US dollar. GBP, not GPB. Breakout trade. We're going long at 141.88. 141.88. Stop loss will be just below here, 3 pips below here, in fact. So it'll be 141.07. That's going to be the stop loss. And TP1 will be half of the risk. So actually, no, the new rule, isn't it? Sorry. The new rule is TP1 is going to be, not TP1, all out. All out is going to be DR2 or the top of the range, whichever comes first. And all out for the short is going to be the monthly pivot, okay? So they're not very good rewards available here, I would have to say. The one long's not too bad, but the one short's pretty poor. But that's not what it's all about. Okay, so there you go. I'll place the orders. Again, extremely small micro lots on here, guys. Nothing that's going to make you cry if it doesn't work. Something like that is fine for me. The buy stop is long at, I did say 141.88. And the stop loss is at 141.07. Okie dokie, that's the buy. The sell is the reverse of that. So sell, again, please don't put any meaningful money on this. Sell stop at 141.07. And the stop loss is at 141.88. Okay. There's the stop loss for the long and the entry for the short. There's the stop loss for the short and the entry for the long. Righto. I wouldn't think that's going to happen anytime soon, but hey, you never know. If it explodes, it explodes, and it can do. The pound can do that very, very easily. All right, now today is going to be full on. because I've got a few positions that I want to point out to you, a few positions that we've cancelled, or a few orders that we've cancelled, a few that are setting up, and a few that I've already taken. Nothing's in the market as yet. Nothing has triggered, and that's pretty much been the story of the week, where nothing has actually triggered me into the market, certainly on the longer time frames. G'day, John, or Quizmaster, should I say? John's just joined. He'll be enacting his role as Quizmaster come about another half hour or so. We'll get him to warm up and get the pencil sharpened there. And we're also going to do a lesson today. I noticed yesterday that David was asking some questions around trading highs short and lows long. And I'm a massive fan of it. Don't worry about that. But they have to be contextual. And I hope to take you through the process of getting that context right today in particular. Well, it's really all about, not in particular, it's really all about the lower time frames. So intraday trading. And it is an art form. It really is. And I don't do it a lot right now because I haven't got time. Hi, SF. And when I haven't got time, I generally tend to stick to the bigger time frames, which you'll see all of the trades that are, all the orders that I've got in the market at the moment are pretty much on the daily, weekly, monthly, and 4 hour sometimes. Not that I don't want to trade intraday. I love to trade intraday because it can be quite stimulating, I'll put it that way. And you've just got to have the time to do it. And I don't. I mean, the only time I'm spending in front of the charts right now in my life is Monday morning. No, don't do Monday mornings because that's a follow-up after the weekend, right? I've already done my Monday work on Sunday because we do the preview show. Thank you, Angel. Don't forget, yes, the euro-dollar prediction competition. Angel's just put that link into the chat box, so make sure you take part in that. Absolutely free to enter, and you could get a $50 voucher. I was going back to the only times that I'm spending in front of the charts right now are really maybe half hour before the show, if I'm lucky, on Mondays, the hour and a quarter of the show, or hour and 20 minutes of the show on Mondays. Then I just switch off. Unless there's something really, really exciting, I might set a reminder to myself to come back in half an hour or whatever the case may be. And then on Tuesdays, it's up early and I do my analysis on the daily charts. And that probably takes me half an hour to an hour. And then same again on Tuesday, Wednesday, Thursday. And so I'm only spending really a couple of hours in front of the charts each day, and that's not enough to do intraday trading for my system. So hopefully that kind of helps you understand where I'm at the moment. It's not a case that I don't want to trade the intraday charts. It's a case that I really can't trade the intraday charts. That said, I can certainly give you my opinion on how they should be treated. Let's take a look, however, at what I was looking at this morning. I amended a couple and I took a new one. I think that's how it worked. So let's go with Kiwi Cad. We had an order on Kiwi Cad yesterday, which was long above this bar here. As is completely evident from the chart, price didn't want to know anything about the long, and it looks pretty much now like it wants to at least, it may even form a right shoulder, but certainly going to have a look, you would think, at the lows perhaps. No certainties. So that order should now be done and dusted. Get rid of that. Doesn't exist. I'll actually take that out of my chart. Euro dollar's there because I like to trade euro dollar on 30-minute charts, and we can have a look at that particular scenario. Not that it looks good because I don't have any trade lines apart from this one here. So price is nowhere near a trade zone for me. Euro Swissy. Now we do have an order on Euro Swissy. And I think what I've done here, we did have an order on Euro Swissy yesterday, which didn't trigger. And actually, I want to point this out to you. G'day, Lewis. How you doing? It's really, really important if you're trading in the same direction in particular as momentum, that you get your entry well below the low of that momentum, because exactly what happened here is likely to happen. The market will generally test the low before it goes in the opposite direction. So that's kind of a trick. Well, it's not a trick, it's just a pointer, and something that's very, very worthwhile knowing. Now, that's the case that we had yesterday, of course, and particularly glad that we had that. Otherwise, we would have had a bit of a rough time overnight, and wouldn't be feeling too good about ourselves right now. That said, I have now moved. I've kept the same entry because we've now got a second rejection bar, this time very clearly of the monthly pivot, the daily pivot, and the weekly pivot. So it's a very clear rejection bar. It's got a white body, so it's a candle I like to trade. And same as I said yesterday, we've got a clear TP1 at the bottom of the range, and we've now got a better reward to risk because we can move our stop down to here instead of having it up here. So this looks good to me. If nothing else, as a range trade, and I think we can pick up profit here. Maybe take a little bit more than 50% off if you're willing so to do. But I also see this confluence area down here, which does interest me. So I think if we can let loose here and get below this range, coming off the top of the descending channel, I think we've got a good show of getting down to here, which is what, 1.086. So it's another 100 pips away from where we are at this very point in time. And we've risked what? 49 to 85 is 36 pips only. So that's roughly a 3-to-1 trade if we can get it. So that's appealing. That's why I've replaced that order, but changed the stop loss. Euro Kiwi, we had a sell in place on this bar. And obviously that hasn't triggered, and the market has moved now above the trade line. And two closes, well, not a close yet above it, but yesterday's close was above that trade line. That kind of gives me a little bit of the, okay, we're probably wrong here in our directional bias at the moment. I'll wait until we get a clear lower high up in this vicinity before I look to enter that again. So that one's cancelled. Euro Kiwi is Gonski. We'll get rid of that as well to save the clutter. Euro Swiss we just talked about. Pound Swiss is another one that I've got an order on. And this one on the daily chart is very much, well, it's exactly the same. No, it's not exactly the same. It's actually better than Euro Swiss. Why? Because, that's why. No, I'll tell you. It's a clear key reversal bar at the top of a range, that range being probably in here somewhere, followed by well, it's not a reversal bar, it's a high test bar, again across the pivots, so rejecting all of the levels above the pivots, but it's also an inside bar on Tuesday's bar. So that means it's a go zone for me with context, and I'll get to that very, very shortly, but I'll point that out to you. The trend to me is clearly down on pound Swissy, and for that reason, when I'm in a downtrend and I get a key reversal bar followed by an inside bar in the same direction as trend, that's just an automatic have to trade it, have to, because it's got a very, very strong potential, probability is the word I'm looking for. It's got a very high probability of getting us some money. The trick here, of course, is to get your TP1 right, because it could bounce here. And I think that's where I've got my first take profit, is it not? Just there, 126.50. Oh, this is expired. Why is it expired? 126.49. I might be a little bit liberal with my first take profit. Okay, I'm going to place that again because that's perfectly valid trade. 0.5% will do. We've got an entry at 126.82. It's what you got to watch if you're trading with these trade managers. You got to watch the expiry date. I'll make it tomorrow. 126.82. That's happened to me a lot when you're using EAs. Just got to check everything. 127.38 is the stop loss. Get rid of the take profit pips. We don't want that. Take profit 1 will be at what level? 126.49. Let's make, we'll leave it there. And half off the table at that point. Stop loss to safe place, which would be 126.49 to 82 is 33 pips. So that will be our trailing stop. TP2 we'll think about if and when the time comes. Okay, so there's the order. It looks wrong. The entry's wrong. Why is that? 126.82. Maybe I was looking at this on a different chart. But it's dead set wrong. That's interesting. That was yesterday. No, it wasn't even yesterday's entry. All right, I've got to fix that, guys. Sorry. Let me go with underneath that bar. Actually, underneath that bar would be better. 126.75. I can't change that. I have to delete it, don't I? Delete. $126.75 is the right entry. And the stop loss is at I better check that also. 127. Yeah, it's way wrong. Or is it? Which is wrong? 127. Hang on. Wow. Must be another order or something. 127.71. Is the stop loss. So I better fix that too. $126.75. And TP1, I think that should be right, 126.49. I'll check that, however. TP1 there, 126.49. Half off. Have I got it wrong again? No, I'm okay. And 126.49 from 75 is 26 pips. So 26. Let's see what that looks like. TP2. Sell. It looks a bit better, doesn't it? Yay. So there's your numbers. If you want to follow that one. 126.49 is a little bit on the light side to be. Oh, no, it's not too bad. We're okay with that. So that's pound Swissy. We've got pound Swissy, euro Swissy, euro yen. How's that going? Still waiting on that, aren't we? Yeah, no, don't like it. No room. Euro Kiwi, we're waiting on a lower high, and there it was, but it's now been eclipsed, right? And we were questioning that. I remember this now, yes. We were questioning if it had been to the bottom of the range, and were we actually looking for a higher, lower, or lower high? Looks like the lower high has now been taken out, so we'll wait. Well, not necessarily, but there's no close above it, but certainly we've spiked above it. We'll wait on this to give us a clearer indication on Euro Swissy. Aussie Yen. I do have an order on Aussie Yen. That hasn't expired, has it? No. And that's getting very close to triggering. Now, I have been, And of course, Ash is probably still in this trade. Imagine that would very much be the case. I have been waiting on a significant lower high to trade this short. Now, you might think, why? Well, it really is based on an overbought situation, in my humble opinion. If you've been listening to me in the last couple of weeks, I have been saying 1, 2, 3, 4, 5, 6, 7 months, which have now completed, is enough. 7 months in a row of rallying on this currency pair is extremely unusual, if not unprecedented. I haven't really gone back for the rest of time, but if you can find me, and nobody's put in the chat box that they found any time in history that Aussie Yen has gone more than 7 months in a row. I said that last month, but 6 months in a row. Yet it tried to go again and put in a bull bar. I'm very, very keen to trade this short in some fashion, that at least we might get a black bar right that is the doji, who knows. But that's what I'm seeking. So I think this is an awesome opportunity if there's a setup there. And the setup for me at the moment is double top followed by a lower high. And looks like that's very close to, or thinking about triggering. We'll see if that pans out. Entry level is 84.73. So we're about 3 pips away from entering. And the stop loss is 85.21, which is way up here above the swing, right? Above the lower high. And TP1 is 84.60. So this is a very slim TP1, I've got to say. And really outside of my preferred option, which is 1/3 of the risk. So if I'm taking, what's the risk? 48 pips. So I wouldn't want to really be any less than 16, but I am, because I don't want to trade beyond the weekly pivot. But I'm very, very keen, as you are aware, to get short this pair. It may not work the first time. It may not even work the second time, but I'll just keep trying until I get, I'll get a result out of this. But I won't be taking silly risks like putting a TP1 down here. I'll still be using my normal trade management. And that's about it, guys, as far as the week is concerned. Euro Cad. Oh, no, I've got a Euro Cad. Do I sell Euro Cad? It's a key reversal bar. What have I done here? It's nothing. I've got an order on Kiwi Cad at 147.49. You know, let's check my other accounts, guys. That's interesting. Okay, we'll forget that because it's gone well beyond the entry. Why would I be looking to trade that short? I must be going mad. Okay. We'll just yesterday's bar on Euro Cad, Lewis. Doji bar. Oh, sorry, this bar. Yeah, that's not one that I trade, right, as you know. Although I did trade one yesterday, but it's completely different circumstances. Oh, Aussie Yen. Okay, cool. On yesterday's bar, well, I'm doing the same, eh? I'm exactly the same. Swee, dollar Swissy, though I know I don't like the, no, I don't. I see weekly potential lower high formed and the daily as well. Dollar Swissy. I should have a dollar Swissy chart here somewhere. There. That's where Dollar Swissy. Get rid of that. Okay. Dollar Swissy, you're seeing weekly lower high and daily as well. This bar here, I like this bar here. I'll tell you what I don't like, Sweet. I don't like a low test bar followed by a high test bar, because to me, it is saying, WTF are we going here? Where are we going? I love this candle. I really love this candle. I think you're absolutely spot on to acknowledge it, because it's not only rejecting the monthly pivot, there's also a horizontal level there that maybe you can't see, but it's there. Probably about there somewhere. So you can see resistance here, support here, resistance here, and it's coming back off it again, in my opinion, and the monthly pivot. The problem I've got is that combination of high test bar, low test bar, or preceded by low test bar. Where are you seeing it shape up on the other time frame? That might be interesting. Okay, you noticed on the weekly. Ooh, really? Dollar Swiss, weekly chart, potential lower high formed. Oh, I don't see that. I see a higher low, a potential higher low. Perhaps that's what you mean. Yep, higher low, cool. Yeah, totally see that. And my dismissal of an entry short here, and I totally see this candle that you're talking about. That's good. That's good. I like that. You've got a bullish engulfing bar. You've got a higher low, and which you would now have entered had you traded it. And you've got on the weekly chart another potential higher low, which may well be the right shoulder of an inverted head and shoulders. Now, if that is the right shoulder of an inverted head and shoulders, this is a massive sign. When you've got a right neckline, in my opinion, this is there's no textbook, right? There's no, that I know of anyway. This is out of my head because of seeing it so many times. When you do have an inverted head and shoulders and an ascending neckline, it is a very strong signal that price, if it actually goes back there and breaks it, will go very high very quickly. So keep your eye on that, Swee. I think you're really on the right track here. That makes a lot of sense to me. It does make a lot of sense. And as you know, I don't want to trade it short. Okay, cool. Why do you like it? Inverted head and shoulders here too on the monthly potential. Yeah, okay. I see why you might like it. False break of that support level. Like it. I might have to put that on my watch list as well. But as you know, and as you said, yeah, positive carry is good also. I hate trading the dollar. I hate it. Anyway, I like your thought process. Looks good to me. Really do. I'm up to date, am I not? Let's have a look at the pound. Has that done anything yet? No, probably not expected to get to these levels for some time yet anyway. Let me get rid of that. And gee whiz, we're 24 minutes past the hour already. That means that I'm going to go into this lesson that I promised to deliver. Now, I've been packing bamboo plants all day, so I've had no time to prepare for this. So it'll come completely out of my head and off the cuff, which, John, question. What's the maximum risk percent per trade on the ATW accounts? I think it's 1%, mate. Pretty sure it's 1%. Yeah, it would be 1%, definitely. But, you know, I'm not admin, so, but I'm pretty sure it's 1%, mate. Okay, so like I said, this little lesson will come completely off the top of my head and completely unprepared, but that, in my opinion, you'll probably get far more out of that than if I had prepared it, because oftentimes, in particular, somebody will ask a question, I'll go, oh, okay, yeah, that's a good thing, and I'll go off on a tangent, as I do. I'm a tangenter, if there's such a thing. But I wanted to point, and I know that later this afternoon or this evening, Alexis, who apparently has been away from trading for a while, I didn't know that, but she's doing an interview with Paul B in his Thursday segment, and Meet the Traders, I think it's called. And she's going to describe her method of getting back into the market as I understand it. Now, I think that's an absolutely opportune time to give you guys a run through of what I believe, and I'm only talking intraday trading here, but it's probably relevant to bigger time frames as well in some cases. The main criteria of getting into intraday trading is to know exactly where you are and exactly what you're looking for before you sit down in front of the chart. Now, that is relevant, of course, to any form of financial transaction, to be honest. But I think the number one thing, and getting back into the market after being away for a while, here's a massive tip that I can give you, and it's to have a cheat sheet. So what you've probably learned in the past, although it's in there somewhere and maybe down deep somewhere, you may well have forgotten a step or two. You may well have paid scant attention in the past. And, you know, if I'm honest to myself, then I have to say, gee whiz, it's a long time since I had a cheat sheet. And if I went, and I am on holidays, as I said before, from intraday trading. So perhaps it is a good idea for me to go through this process and think it will be valuable to me as much as it will be to you, or hopefully it will be to you. If not, then just tune off or look at the charts or something. But I believe you need this cheat sheet to keep you honest, to keep you on par with your own business, if you like. And, you know, we've got to treat trading as a business. If we don't, then it'll chew us up and spit us out. So I'll put on the chart here, actually, what I believe your cheat sheet should be if you're going to look at trading intraday. And I'm probably talking about, in my case, the 30-minute time frame and the hourly time frame, which is kind of where I only spend my time in those areas. I don't really go outside of it. I trade the 4-hour, but that's more an end of day scenario than an intraday. So the first one I want you to think about is trend. Now, some of you might think, well, you don't trade trend. Why do you want to know about trend? Well, it's important to know about trend, because if the market is trending and trending strongly and you are in a retracement phase, let me pull up a trending market, I suppose. And is that going to stay there? It should stay there, shouldn't it? What's been trending lately? Pound has. If you're in a trending market, and, you know, if you're in a strong trend here and you've just retraced, do you really want to go short if you haven't got, say, a double top or an inverted head and shoulders, or a whatever candle floats your boat, but any kind of reversal pattern? Do you really want to go short at the bottom of a retracement? Well, it may not be evident that it's the bottom of a retracement, but it's a retracement, right? So are you really wanting to trade short here? And if you're a trend trader, the answer is no. If you're a range trader like me and you've come to the bottom of the range, the answer is still going to be no. as you have. So it is relevant to understand whether you're trending or otherwise. And in fact, it's imperative to know whether you're trending or otherwise, because if you are a trend trader, then you're looking for these retracements. You're looking for the bottom of these retracements and signals like that tell you the market's on its way again. Signals like that. Wow, you can trade this easy, can't you, in retrospect, because all those candles are telling you to go long. So it's important to know whether you're a trend trader, range trader, or a throw a dart at a board trader, to know where the trend is and if there is a trend. So I think that's probably the most important step one that you can have. And you need to know 3 trends. Where are we trending here? Well, to my mind, trend is short, right? We're underneath that trend line. That is the primary trend. The secondary or intermediate trend, if you like, is most definitely not short. Not on this chart anyway. So the weekly intermediate trend is most definitely long. Yeah. But I'm sure you're saying to yourself, and you should be saying to yourself, but wow, we're at a strong resistance level here. We've got a monthly trend line. We've got a horizontal level that stands out like the proverbial DBs. I've also got to take that into consideration. And the daily, which is the current or short-term trend, is telling me there is no trend. So how does that all help me? I've got a primary trend that's short. I've got an intermediate trend that's long, and I've got no trend on the daily chart. Well, if you can't line all of those up, then isn't it time to move on to the next one? Yep. However, if you're a range trader and you know that the primary trend, the monthly trend, is short, then the secondary or intermediate trend is long, but it's at a strong resistance level. That's a bit of a different story, isn't it? Because that's screaming at you the next move here, logically, and don't confuse logic with reality, it's not the case. Logically, you're looking for shorts here. But are you looking for shorts at the bottom of the range? No, you're not. So intraday, you've now got a picture of where price is and where it needs to be for you to trade short, which is your bias. It has to be your bias to trade short, really does, if you're trading intraday. So that's trend. The next thing that I'll put on the chart, and we will get down to the 30-minute chart, I promise you, but it does take some time. And this I believe, will give you a huge advantage and stop you from making silly mistakes. And it is market structure. Now, market structure versus trend is probably, well, I've got it number 2 for a reason. Market structure on this chart is this ascending channel, right? Which is at the same time agreeing with the intermediate trend. So we know that price has been doing this thing for some time, and it's now it's faltering at that level. So it doesn't really want to go through it again. It's gone into range. And again, that's suggesting to me, the market structure, that the next move is probably going to be down towards this monthly pivot and bottom of the structure. Now, it's been here for a long time. So there's probably another market structure in here that we can pick up. And there it is. That's telling me that we're coming off the bottom of that range and we're likely to head to the top of it. So this is completely confusing. Move on. Just go to the next one. This one's telling me short. This one's telling me long. Why do I bother? Why do I don't need to bother anymore with that. Unless I really, really can see something that catches my eye. And you might think, and this is, you've probably seen me do it 100 times. Okay, I want to get long to get short. And a lot of people will tell you don't trade in the box. And that's particularly relevant if you've got no idea what you're doing. And really, the market has no idea what it's doing here. So it's really tough to actually get into that scenario. Yes, I can see the potential for the long. We're halfway between the top and the bottom. Is it really worth going to? So that's your market structure. There might be on different time frames a different market structure. There might be a rectangle, for instance, that you want to look at. There might be a triangle. There might be a rectangle. There could be anything that market structure is all about. That's what I mean by market structure. Where is the market actually reacting? What's it reacting off? It might be your EMAs. It might be MACDs. It could be Bollinger Bands. It could be anything. Whatever floats your boat. For me, it's channels and trade lines. But for other people, different things. And like I said yesterday, there's 100,000 different ways to get into the market. There's 100,000 plus one different ways that technicians look at go about their business. But for me, this chart right now is really confusing. Then you dig down and you come to your 30-minute chart, and it's even more confusing because really you're in it's called terra nulli. Anybody know what terra nulli is? There's one for your quiz, John. No one will get that. I don't believe they will. Terra nulli land. That's it. So yeah, where are you going here? We've just discovered that there's a case for the long, there's a case for the short. There's a real case if you get up to here to go short. But going short here has got its problems. So that's market structure. The third one that I would put on your chart or on your, what's it called? Cheat sheet. The third one would be market sentiment. Now, this one is a whole lot more difficult to gauge because you've actually got to know something. I think this is number 3, but it probably could be number 6. Market sentiment. That's why it should be number 6, because it can change. It can change quickly, and it can change daily, and generally does change on a daily basis. If we saw, I think the dollar yesterday just went up and then came straight back down. That is an indication of market sentiment changing very quickly, and it's generally as a result of something fundamental or a news announcement, a number that's been posted somewhere or somebody tweeting or whatever the case may be. But generally at the beginning of the day, there is a market sentiment based on what happened probably yesterday or maybe the day before, if it was substantial. So the market's actually thinking that, wow, gold should be bought now because of XYZ. That's, to me, is market sentiment. It can be gauged with relative strength indicators, all those sorts of things. But to my mind, market sentiment changes rapidly and at least daily in a lot of cases. If you've got a market sentiment that lasts some time, then that's where your trends come from, because the market's thinking exactly the same day in, day out. Nothing's happening to change it, right? But if, let's go back to the Trump era, right? If there was a tweet overnight, then market sentiment changes on that tweet. And that makes it really difficult to trade. But whilst ever the market is in terra nulli in terms of market sentiment, then you really shouldn't be too worried about the direction that you're trading, because it shouldn't change. It shouldn't change too much. The fourth one it kind of goes with that, but it's also important before you enter the market to know what on earth is happening around you. And I don't mean you have to know that the local fire brigade just went and rescued a cat out of a tree, but you do need to know that whatever is posted for that day, tomorrow it's NFP, right? Or what used to be NFP is now NFE, I think. You've got to be aware of that. There's no question. You have to be fully aware, if you're trading intraday, that the market could go very, very quickly on a news event. So I don't need to dwell on that. Everyone should be aware of it. Then, of course, we actually get down to thinking about trading. And to think about trading, we need to have our plan in place, right? We've been through our analysis. I won't even put analysis up there, right? I should put analysis. Okay, I will, because some people may not even recognize that it's a thing. But it's a thing. Believe me, it's a thing. So your analysis includes all of the above, plus whatever your system is, right? Whatever your system is of getting into the market. And that could be a daily wave rider trader. You could be a flow trader. You could have your own method of getting into the market, and all are perfectly relevant. But unless you've done that bit, the analysis part, that tells you what your bias, number one, should be for the day, and where you're likely to get into the market, number two, based on whatever strategy you're trading, then you shouldn't be in front of the charts. You've got to know this shit. You know, it's got to be in your head. You've got to have that bias, and you've got to be willing to live by that day in, day out. And you've got to have it before you look at the charts. And then, of course, we get to this wonderful thing that we've all learned in different methods and read different things and been taught different things. You've got to have intraday, unless you're a genius and can just trade levels, scalper in other words, then you need to have this thing. You need to have a reason to get into the market. Now, again, that may be a candle pattern. It may be the top of a range. It may be a bounce off a EMA or a Bollinger Band or anything. Whatever it is that floats your boat, you must have that before you enter the market. And the reason I put that in, I guess, italics, if you like, in my voice, is it's very easy to say, oh, there's a candle pattern that I like. I bet you I can find 20 of them that I like on this particular chart. There's one there, right? Now, if I were to trade that, I'd be going completely against my belief that at some stage today, the daily pivot's going to be tested, which is exactly what's happened, right? So just because a candle pattern sits there on a trade line, which is what I like to see, I can't just enter the market. And that's my point. My point is, you've got to think about your setup. Your setup's not automatic. It's contextual. Everything's contextual. You've got to have all of these ducks in a row, right? And then it becomes trade management, right? You've got to think about your risk, etc., etc. You've all learned that, and if you haven't learned that, then you need to learn that, because managing your risk, apart from all of those things, you can do all of those things, get into the right trade. If you haven't managed your risk properly and you're not prepared to manage your trade properly, then you get to something like here, you say, oh, okay, daily pivot, yeah, once it's beaten that, we're going to go short and we're going to go down the trade line, and the market goes bang like that. If you haven't taken profit here, then you can get yourself in real trouble. And that's what I mean by trade management and risk management. Those are what, 2, 4, 6, 7. Look, I could probably put a few more on there, but you don't really want, in my opinion, a cheat sheet that is as long as your arm. But if you can work around that, I think that's an excellent cheat sheet to have. And I highly recommend that you have one sitting beside you on your monitor, wherever, because it doesn't matter how long you've been trading. In fact, it's probably worse the longer you've been trading, that you tend to go, oh yeah, nah, don't need to know that. No, that's not important today. You know, if you're getting rid of 3 or 4 of those, you're kidding yourself, because you're going back to the casino, guys. Must have all of those things, even if and you get used to it, right? You do come to a process where, I mean, I've just rattled those off the top of my head, okay? So I had to extract them a little bit. I had to think about it, because it's back in there somewhere. Do I ignore some of them? Yes, I do. And that's my bad. That really is my bad. I should have that cheat sheet written up there myself and go tick, 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 tick. Yes, yes, yes. Done that, done that, done that. Got the setup. Yep. The risk, that's going to be different for different people. Depends on lots of things, including your appetite for risk, including where you are in terms of the chart. Just briefly, I'll go, and we've got to get to the quiz, I know. But just briefly, and I'll go through this again for me and those of you who don't understand my way of trading intraday and the risk portion in particular. I won't trade outside of this area. Let me do that. And again, I'm talking intraday, nothing else. I won't trade outside of that area at full risk. Now, the best way that I can tell you to trade is if you're below DR1, or even if you're above DR1 coming back into DR, or inside the DR1, DS1, which is what that region is, and the daily pivot hasn't been tested, you can trade that at full risk if you've got a setup and context is good. But if you're up here and trying to go long, you can't trade that anywhere near full risk, because the chances of you going outside of that area, daily resistance 2, is absolutely dreadful. The probability is so bad. It's kind of less than 15% that you're going to get this right. And I'm not talking tomorrow, I'm not talking the next day. Of course, it can go there the next day, but you're not trading the next day. You're trading on a 30-minute chart, and you really can't expect the market to give you more than, and we spoke about it yesterday, and David, I'm not sure if you're even in the room, ATR is super important when you're trading intraday, because the market has this incredible ability to stay inside that average true range. That's why it is an average true range, because that's what it is. The market stays inside that range intraday. And I'm not talking about, you've got stops up here somewhere and you're happy to go for stops to come back up here. You can't afford that on a 30-minute chart, because your stops are here and you're trading down to here. And you know that the market's only going to give you, for instance, an ATR of 80 pips or 90 pips. Why would you think that you're going to go outside of that? So again, look at yesterday. The market moved from open, the market moved 50-something pips. Now, ATR on the pound at the moment is, I don't know what, but let's find out. Insert indicators, average true range. daily chart. Let's go back 20 days and click OK. And the ATR currently is 87 pips. So keep that number in mind. And yesterday it went, what did I say, 52 pips from open. So open there, market went 52 pips. Now that is 5/8, or what's that? 5, 12, 60, 62.5%, something like that. That's 62.5% of the ATR. It's also very close to a support level. So my question to you would be, very strong bearish bar. Do you really want to enter the market there? Shouldn't, because it's already gone 60-something% of its average range, which means there's 38% left, right? So 38% of whatever, what was it, 82. I'm not even going to, so 40% of 80s, 35 pips, say, right? So the maximum you can gain out of this going short, according to the ATR, is going to be 35 pips. What's your risk going to be? I don't know. What if you're up here? Maybe it's 40 pips. There's no sense. It doesn't make any sense at all. Do you then trade it long? Maybe, if you've got a setup and a reason to do it, then yes. And you had a reason to do it. Untested daily pivot down here, bottom of the range. Can you pick that up on the 30-minute chart? Maybe. Depends on the way you trade. I wouldn't work for me, but you may find a way into that. I would be looking up here somewhere, but the candles are too big. That's probably a news event, I would imagine. So that's the kind of thing. And I don't want to dwell any longer on it because we've only got a brief period of time to do that today. But I hope that gives you some idea as to what you should be doing. Your cheat sheet should look like that even before you start thinking about where I'm going to trade. But once you've got to here, then work out your risk. Your risk is, okay, I'm going short here after 52 pips. I've got an untested daily pivot above me. What's my chances of getting some money out of this short term? SFA. No, that's not true. There is a slight chance, but it's not probable, right? It's not probable. And that's what we're trying to do here. We're trying to trade where probability is, because guess what? Over time, probability wins. Simple. Okay, that endeth the lesson for today. I hope it was of use to some people. And if not, just hit the hate button. Cheers, John. And now it's time to turn attention to you, buddy. Can you talk?
I think so.
Thanks, Paul. Thanks, Lewis. I hope you got something. Yeah, there he is. The Quizmaster. Are you well, mate?
Yeah, I'm always good.
Oh,
I've learned to what's the word?
I don't know.
After 14 months, it's not as bad now. It's not as bad. I think when I first started it was emotions would get the better of me. So now, once I've placed my trade, as long as for me, as long as it's been okay, if it's not going the right way, it doesn't matter how much I scream and shout.
Yeah, it's not going to. You can pray, you can play music, you can stand on your head. It's not going to make the slightest bit of difference.
No. But long term, yes, it's going well. I knew this would take time. I have a friend of mine that works in the City of London. I wouldn't say his job is very nice. He's a nice person, but what he does isn't nice. He makes a lot of money.
He's got a very big handicap, number one, if he works in the middle of London.
Yeah, he makes a lot of money, doing what he does. But it said it took him a long time.
Yes, no secret there. Yeah. Anybody who can pick this up in a short period of time and can go long term has got my utmost respect, because I don't know anybody who's done that.
No, I could. But it's going well. Lose some, some things go well. I'm not going to get fussed over it. I got to try and get. I got to, it says this will stop others sharing screen. Do I just press continue and then that means I change the screen?
Yes, yes, mate. Yeah, just keep going.
Yeah. So it's.
Have you got a cheat sheet?
Yeah. So let's do that. Yeah. Then I'll move that over there. That seems to work. I'll do that. That would work.
You got it. You got it. No, Lewis Ash not here today, mate. Back on Monday.
Okay, it's a very quick one today, because we've all had a lesson. So
Yeah, I haven't given you much time, have I? Sorry about that.
I no, but I adjusted it. I adjusted everything. Okay, this is on because as a class teacher, this usually catches everybody out. There are a few countries in the world where the more famous city is not the capital. Australia would be one. So the capital city of Australia, the amount of times I get told it's XY, and I say, I'm sorry, it's not. Jeff,
yeah, I'll exempt myself from putting an answer in there because I don't know. I think you're right. Don't think anybody will get this. Apart from Australians, of course, and expat Australians.
Yeah. You should come up with Canberra. The only reason I know it's Canberra is
Well, you got it.
Oh, yeah. Oh, nice one. Yeah.
Yeah. Well done, Sweet.
I've got a few friends that live in Australia in the music camp. One of them lives in Canberra, so that's the only reason I know it.
You know, Canberra is, believe it or not, colder than Tasmania in the winter.
Wow.
But that's a good thing.
I've never associated Australia with cold, even though I obviously I now know, but I've never associated with that. It's always been like a hot, sunny image.
Yeah, for us down the bottom of Australia, of course. Next stop's Antarctica, mate.
Oh, yes, yeah. That might mean I'm not very good at geography. One of the movers of the market of the week. What is the current rate?
Now, don't forget they had a rate announcement on Tuesday, guys.
I put the cash rate in because I think if you delve into it, the banks have got their own thing going on.
Yep. Tell me when you're going to change, and I'll put the answer. I'll put my answer.
Yeah, Lewis is as they say, on the money. We'll take him to the casino in Singapore if they were open. But it's all there. It's all checked. Nothing's changed.
Nope, didn't do a thing.
You had to be in on Tuesday's show. I have to say, it completely baffled me. Shukri was talking about some alternatives where you could make your cash, but he mentioned two things in particular, and I had to go away and have a little think.
I'll have a crack.
But it was the main conversation all the way around it. Oh, yes. There's a little bit of that. It kept circulating around these two things. Pools and parachains.
Okay.
Yeah.
Yep. Parachains. One or half each?
Oh, it's a point each on that one.
Right, at point each. Yeah. I only get one.
Okay. She's not in the room. Ainsley mentioned three leading imports topping the metal import charts into the US. There are 3 things that they're hot after at the minute to get their infrastructure projects going. 3 metals, and talked about it quite a lot.
That must have been when I was looking at the charts.
Yeah, Jeff zoned out. But one of them is Swede's got 2, definitely. The other one is I think China are having first dibs on most of it that's coming out of Australia. I was surprised. Iron ore, aluminium. I'm English. I can't do the American bit, and copper.
Did she say iron ore? Did she? Okay.
I think so.
Yeah. Well, could well have.
Okay, Ainsley is really successful trader of golden oil, if you have followed it. And obviously she does commodities and Forex pairs. But if you pay close attention to her screen, she has a tailor-made setup for her. But how many time frames does she have up? And it's the same if she's looking at oil or gold or copper. It doesn't change. How many time frames does she have up on her screen at any one time? I know this because I always what's the word? I make a Swede is definitely one to take to the bookies today.
Swede got it?
Yeah, Swede's got it correct completely.
Wow, your streets ahead, Swede. I'm going to have to pay attention to Ainsley.
4-hour daily, weekly, and monthly. Obviously, you've got a lot of indicators. I've sort of moved over it over the last 7 or 8 months. I don't use them.
You don't use what?
Indicators.
Good.
I just don't use them. The only one I might have volumes on there, just to sort of see if it's like a fake. There's a big market move, but there's not much volume. Other than that, I don't use them. Daily Wave Rider's got them on, which obviously I've grown up with that one, so that's there. But at any other time now, I don't use them. They don't.
Yep, everyone will come to that in their own time. It's very much a personal thing. And relying on indicators is perfect if you've got absolutely no time and you just want to trade the system. But if you really want to understand the market, you'll eventually get rid of your indicators.
I think that if the pandemic had not hit, then I would still be doing my I can't call it a day job because it's a night job being a musician. Then I probably would have, but because the business is on hold, I've been able to watch the markets more. So
and you definitely learn more.
Yeah, there's a new job. Very small. It's a very small one today,
mate. There's no contest. Swee knocked us out. Well done, Swee. Done it again. Champion.
Next week there'll be a little bit of a musical twist to it.
Oh, okay, awesome.
The tunes are royalty free, so I'm not out of copyright, but people should know them.
Look forward to that. Thank you, mate. Once again, a very interesting one, and I'm sure a few people have learned something out of that.
Yeah, I hope so. It's good fun. It's good. I do use the elements of it for some online teaching that I do, which is good.
Cool. All right, we are nearly at the end of today's show, guys. But before we do go, I just want to update a few things, in particular what the charts are telling me, and if I am going to be back in front of the charts a little bit later, which is possible tonight because I think my wife's out for dinner or something. Sorry, I'm just reading all the notes there. Okay, euro dollar. Already gone. Not much I can do here, except have a look at the market structure that I don't have on my chart, which is pretty clear. Getting back to market structure, right? And the market structure for me is that rectangle right there. And like I said before, completely confusing because, well, not confusing. It's completely untradeable until I get a higher low. That may come here, and that's fine. I can look to trade that long, but I'm not interested in trading it short at this level. No, thank you. Euro Swiss, you know about that. Orders are in the market. Do I want to preempt that entry? And let me have a look at the 30-minute chart. So we know our bias, we know our market structure. 30-minute chart, don't like it because we are in, what did I call it? Terra Nullis.
I looked it up, couldn't find it.
No?
Oh, I thought it was an Aussie phrase. So
I think it is Australian Aboriginal.
Yeah, I've got I think the book I was looking at was a bit more slang. I mentioned I'll try and find it.
Yeah, I'm not sure what dictionary you'll find it in. That's an interesting question. Terra Nullis. Makes sense. Terra meaning land, Nullis meaning jack shit, nothing. That looks interesting, actually, that chart. What am I looking at? Euro Swissy. Yeah, I think a false break here would be good. Although we are in Terra Nullis, that would look interesting. But, you know, I've got the daily sorted, so I'm okay with that. Pound Swissy. Now, I should probably, which I don't think I've done before, if some people cancel the order if the stop loss is taken out without being entered, right? I actually don't do that. But what I would do is I'd cancel the order if the swing is taken out. So whilst ever we've got that swing in place, I'm still of the opinion that the market will go that way. So I'm not really concerned about the stop loss being taken out. I'm concerned about the high being taken out. So that would be my criteria for cancelling the trade, and pretty much every time that's going to be the case. Euro yen, look, I do like to trade euro yen on the 4-hour chart. Don't ask me why. It's just something that I've done forever. And I think it's sometimes very obscure, but always reliable if it does set. Well, not always, there's no such thing, but generally very reliable if it does set up. So slingshot patterns on a 4-hour chart on euro yen are very, very cool. Market is clearly ranging here, and guess where we are? Terra Nullis. So TERRANULLUS, I think it would be, John.
Right.
I think. What's this? Euro Kiwi. Yeah, looks still interesting, that candle, isn't it, really? Remember, we started the week trading this bar here, and we've since gone, but fail at this level. Interesting. Very interesting.
Oh, a Latin expression.
Beg your pardon?
I just looked it up. Yeah, unoccupied or uninhabited.
Oh, it's there, right? Okay. Is it got a derivation?
Terra Nullis has got, it is land that is legally deemed to be unoccupied or uninhabited in Australia.
No man's land. Yeah. Okay. Lewis, I'll have a look at that, buddy. I would like to see this false break play out. But gee whiz, you're going to have to be, you're tight on the pivots. It's really tough there. You probably only have to come under or hit those, close below the weekly, then come back here. Yeah, that's going to be super dangerous. That's Euro Kiwi. Aussie Yen, haven't been triggered into that, but still looking for that to happen. 30-minute chart. Well, there's another tip for you. Don't have your chart looking like that. It's not going to tell you anything at all. You need to have perspective. This trade line, we looked at that yesterday. Amazing. Oh, I like this. Aussie Yen. I don't like the direction it's pointing me, but I like the setup. So we've got a buyer short here. Trend is long without question. What I need to see here, we've got doji bar, followed by a potential re-entry into this range. If we were to get that, so let's say we have a close up here somewhere, and then a retest of the trade line and or monthly pivot, preferably the monthly pivot, that would necessitate a long. Got to trade that if I see that. And this would be one of those cases where I'd be willing to trade long, but still got the short in play. So back to that intraday scenario that I spoke of before. Say we got that candle closed here, and we got a candle that came back to say here somewhere. 5 pips, probably wouldn't trade it. But 7 or 8 pips, 10 pips, something like that, then I'd love to trade that back to here. You'd probably get 1.5 to 1 on your money. It won't be sexy, but I reckon that'd be a reasonable play if it does set up. I think I've come to the end of my tether, haven't I? That's about it. Everything else is in the market. Euro Cad's still running. Aussie Cad's still running. Pound Cad's still running. Oh, Aussie Cad. I want to give you something on Aussie Cad. So blind Freddy can see that Aussie Cad just cannot break this level, the 93 handle. So will it go long is the question. I really can't see it, to be honest, but we are at a strong support level. No question about that. Monthly chart is telling me we're at the bottom of a range and we're printing a very clear inverted head and shoulders. Now, is that contextual? I'd have to say it probably is. So my bias from a structural market structure point of view has now gone in the opposite direction. I'm thinking bounce here, and maybe it's time just to get out of this trade. We are what? Where are we? 93.06. So we're 300 and something pips to the good. 300 pips to the good. 93.06. 339 pips to the good. We risk what? 68. So we're 6 to 1, 5 to 1-ish. I think we're done here, guys. I think we're done. What would I be prepared to sacrifice is the question. 60 pips? Yeah, I think so. I'm prepared to sacrifice 60 pips. So instead of just closing the trade, I'm going to move my stop down to here, which is 60 pips from where market is at the moment. If it goes through, happy days. Then I'll continue to trail that probably on a 4-hour chart, maybe even on an hourly chart. But it's now time to trail because we are at a support level. So let's do that. The new stop loss becomes 93.77. Okay. $93.77. So we just made another 90 odd pips on this one. There we go. So I am expecting this to reverse, actually, really expecting it to reverse. And oil may have a big say in that, because if the CAD goes with a rallying oil, not sure that the oil's got a little bit left in the tank, so to speak, just yet. But if it does, if oil continues to rally, then the CAD will probably continue to rally with it, and this may well keep going. But if oil is at a resistance level, which I think it is, I haven't quite had a look at that chart. Where is it? Oil. Yeah, it's actually poked through it, hasn't it? Weekly. It's probably poked through it. I'd have to say it is through it, but that's the current candle, so not finished yet. But I do think it's wise to take some profit on Aussie CAD, and that's what I've done. Pound CAD, I think, is less an issue. In fact, I think pound CAD can still go a fair way. So I'm hanging on to that one. We are safe in the market, so there's no drama there. Yeah, I think we're okay here for a while. If it goes, it goes. That's not the end of the world. Euro dollar for Terranullius, is it? IUS, nobody's land. Thanks, Paul P. H4, will I take a short below the shift 4 candle? 1, 2, 3, 4. Here? No, because I'm looking for a long. I'm considering a few things here, Lewis. But the first thing I see is we've come off the bottom of the range and I'm looking for a higher low. That's the first thing I see. Second thing I see is a decisive break of the pivots, which would mean I would enter there, right? That's the candle you're looking at. So I get that bit. But it really isn't a setup for me. And I don't think the reward to the risk, which is above here, right? So enter there, risk 37. No, you got half, that's okay. But I don't see the downside at the moment. I'm only seeing the top of the range. So doesn't mean it won't break through, obviously, but I think long to get short, maybe. That's where I'm at the moment. You have an ascending trend line from the 31st touching the 6th of May. 31st touching like where I am, 5th of May. So that trend line, that exact trend line, and ascending triangle on the 4 hour. I can see a channel. That's kind of where I'm at, Lewis, I think. So again, we haven't reached the top. We've come off the bottom again. So yeah, I've got to be long here at the moment. Sending trend line, sorry, from the 31st of March. 31st of March here, right? To 6th of May, which is there. Okay, so you've got a break and retest of that, but it's been broken before. I'm not relying on that one. Is that what you got, Lewis? Is that your trend line, mate? Yep. Two things that I look for. Well, hang on, let me get rid of this. The main thing I look for is once I've had 2 breaks of a trend line, I nullify it because it becomes unreliable for me. And the case in point here is that we've broken it, rebroken it. So that's twice, it's out for mine. If I don't pick up a trade on the second break, which is completely doable in this scenario where you've got, well, what some people call a train tracks reversal and therefore would trade in that direction. I would trade in the opposite direction, of course, but I wouldn't trade that because it's way too big. But now we've got a break and retest of that again. We've broken it for a 3rd time and a 4th time. So to me, it becomes unreliable at that point, or at this point, it becomes unreliable. And I guess you're seeing that because it didn't stop price here. It kind of has here, I get that. That's probably a horizontal level as well. But as soon as that second break occurs, I just get rid of it and then go to the next one, because that then makes more sense to me. When you've got untested trend lines, or tested trend lines twice or 3 times or 4 times. Where's the one I saw before? Beautiful trend line. I can't remember where it is, so I won't go fishing for it. But it's got multiple tests, like 10, 12 tests. It can only mean 2 things. It's either going to bounce off it again or it's going to break through it, because it's tried and tried and tried and tried. And, people will tell you that the more a level is tested, the more likely it is to be broken. Not so much. To me, the more a level is tested, the more it's telling me that it doesn't want to go any higher. Now, there'll be a massive argument around that, and I get both points. But to me, it's not a fait accompli that the more it's tested, the more it's likely to break. I disagree with that entirely. Absolutely disagree. And some people will even go to the point, if it's been tested 3 times, it'll break on the 4th occasion. What a lot of BS. What a lot of BS. It happens sometimes, of course it does. But reliably, go test it, guys. Back test it. See how true it is. And that's what it all boils down to, It doesn't matter what I say. It doesn't matter what anybody says. If it doesn't work, then it doesn't work. Simple as that. And the only way to work that out is to go back and forward. So test it backwards. If it worked 100 times out of 120, fantastic. Keep doing it. If it worked 100 times out of 500, whoops, not so good. Simple as that, isn't it? At the end of the day, everything that you need to know, as I used to say often, is here. It's back in your chart, because it's going to tell you really what the most likely outcome is at this point. It's true. Okay, that is it for the week, guys. John, thank you very much, as always, for the quiz and your company and your questions. Everybody who's participated throughout the week, ditto for you. And Angel in particular, thank you for keeping us honest and on the straight and narrow. We look forward to everybody's company again next week when Ash will rejoin me. And, of course, we'll have the Shukri Show and the Ainsley Show on Tuesday and Wednesday. And John will be back with his Quiz Master next Thursday. I hope your weekend is fantastic and we can get some pips in the bank. That'd be great. And we look forward to seeing you next week. Have a good one, guys.